right, we are live. Pascal, I've been doing this thing for I don't know, podcasting for 5, 6, 7 years, and I'm trying to start them a little bit different. And I realized the first 32 episodes of this show, I basically say, welcome back. Well, what if you were never here before? I'm just making the assumption that you were, but we are live is an actual response. That's a live response because we are live here on YouTube, on LinkedIn, and we're going out to all of the podcast channels. Welcome to the Kansas City Commercial Real Estate Market Pulse. I'm your host, Logan Freeman, based out of Kansas City, if that wasn't apparent to you already. And we are on episode 33, and this takes a lot of work. And everybody that says, oh, I'm going to start a podcast and do this and that, that's fine. But it's hard to continue on. And we have a guest today, and I'm just going to tease, that has been doing podcasting for quite some time and is running or part of running the longest running commercial real estate show, which I have learned so much from and give a lot of credit. And I just was on the show actually with Ash Patel, a good buddy of mine, because we do a lot of commercial real estate. He does a lot of commercial real estate. I was very close to getting Ash a deal here in Kansas City, and I will not give up till Ton and Ash and those guys get to come back and have Kansas City barbecue here with me. But hey, make sure to check us out, Midwest Commercial Real Estate Advisors. We are the sponsor of our own show. So there you go. We are the sponsor of our own show. Michael Bull, shout out to you. I took that from you, the probably longest tenured radio commercial real estate professional down in Atlanta, Georgia. Thank you for what you do. You probably won't ever listen to that. But he always says, welcome back to America's Commercial Real Estate Show. I'm your host and your sponsor, Michael Bull. So I'm just stealing a little bit something from him today. If you want to reach out to one of us, here's our team. If you've interacted or interfaced with Midwest Commercial Real Estate, you've definitely talked to Katie. Mike has got you handled on the multifamily side. Nathan, Flex Industrial, Chad, everything healthcare. And then if you're looking for land and land developments, whether that be industrial, multifamily, data centers, you should definitely reach out to Nick Morales. And that's me over there on the side, the managing broker. I do a little bit of everything. I'm going to tease this out right now. In the next 7 days, we will be listing a new project. So next week, I'll be here going through our deal spotlight on that project, which is a 75-bed skilled nursing facility here in Kansas City. It is the last known viable certificate of need in the Kansas City, Missouri area. Complete blank slate, 32,000 square feet. Come get you some. Very excited for that project. All right. Hey, what do I do here on a weekly basis? Well, I'll try to have a little fun, right? So, Pascal, hopefully you can see I'm trying to keep it fresh, right? Have a little bit of a smile here as well. I'll get to introduce you here in a second. But in all seriousness, I want to be the go-to source for real-time data-driven insights into the Kansas City commercial real estate market. Whether you're an investor, broker, developer, or just commercial real estate curious, this show is designed to help you keep ahead of the curve so you can remember the future, my favorite line. And our mission is to be the premier resource for commercial real estate market intelligence in the Kansas City metro area. And that means I have to stay committed to delivering timely and valuable insights that help our clients make informed decisions. And woo-wee, the next 12 to 15 months are going to make or break somebody out there this cycle. So definitely tune in on a weekly basis. Okay, enough fun on that. Pascal Wagner is a former venture capitalist. Man, we got a VC over here. Axelrod is in the building, everybody. Even kind of looks like him. A little more handsome than Axelrod, but he might be here. But his name is Pascal Wagner. Very cool name for a venture capitalist turned passive investor who built $250,000 a year portfolio through 30 investments. So if you are interested in investing in commercial real estate, today is your show, and you get to ask live questions. Forgot to mention that. So drop it down in the chat, YouTube or LinkedIn. I'm going to be monitoring the comments section. And if I don't, Katie will send me a text message and say, you missed one. Here you go. But today, Pascal educates 200,000 investors monthly as a host, like I mentioned, on the Best Ever Commercial Real Estate Podcast Network. And he shares his strategies to create six-figure passive income. I mean, that's what everyone always calls me and says, hey, how do I get some passive income? Well, today we're going to tell you how to do that, right? And so his approach is helping investors build a financial roadmap. How do you evaluate deals? And how do you access pre-vetted institutional grade opportunities to accelerate that process for yourself? Pascal, I don't know if that was the most fun introduction or not, but man, oh man, welcome to the show, my friend.
Wow, Logan, you definitely have set the bar higher. I'm happy to be here, excited to be here. Thank you for such a warm introduction.
Absolutely, man. Well, we're excited to dive in. So let's get started. Actually, I have an icebreaker question for you, right?
Hit me.
All right. So you've had a unique career path. I don't have a whole lot of venture capitalists or former VCs on the show. Okay. So venture capitalist to investor. What is the one, and you've done tons and tons of shows. Okay. So I try to pull things out that maybe you haven't been asked before, but maybe what's one of the things about your journey that most people don't know? What have you not shared out there in the interwebs?
Oh man, that's hard to share. I'm pretty trying to be pretty public about what I've done online. But I would tell you maybe that I've always throughout my life have tried starting different businesses, and I've probably started 35 different businesses, of which 6 have been successful. Starting with selling candy bars that my mom helped me purchase in bulk at Costco.
There we go.
And sell them for $1 a piece to buy my first laptop.
Okay, well, there you go. You probably have not shared that before. 35 businesses. Okay. All right. So chocolate bars. What are some other unique businesses that you have started? Because, I mean, everybody can say, well, I had the lemonade stand, I had the lawnmower business, I had this, I had that. But like selling chocolate bars, that takes some hustle, right? You're playing the arbitrage game there. But give me a couple more examples of some of the other businesses that might be a little bit more unique.
Oh man, I in college I bought I was a scalper. So I bought Ultra Music Festival tickets.
Okay.
And buy them on, or get like 10 different credit cards and buy them and resell. I did a lot of valet when I was like below 18 years old. I had my I was really into salsa dancing.
Okay.
Still am. And
love that.
Tried doing like a drop shipping shoe store for dance shoes. And I think the reality is like, had I stuck to any of these, they all could have been successful. I think it's my lack of skill that I had at the time that was the reason why none of these, and lack of dedication.
Sure.
Yeah.
What I love about that, though, is you are willing to try. I mean, you took risk, right? I mean, taking out credit cards, playing that arbitrage, right? My next question, to compound on that, double click just a little bit, stealing that from Walker Webcast, Willie Walker. He always says, I'm going to double click on that. So he's a better speaker than I. So I will steal that from you, Willie. Shout out to Willie. Appreciate everything that you do for the industry. How about this? Did you raise venture capital for any of those funds or those businesses?
Yeah, so that's actually what led into my career in venture capital.
Okay.
At one point I decided, like, cool, I want my go at building a tech company, and so I moved to the US, and I always kind of lived in the US. I was living abroad at the time, and I raised money for a company called Walkthrough. We raised a total of $2 million, and I definitely had my swing at building a unicorn. We got to close to $1 million in revenue. We had 55 different team members. We were in 6 different cities. We were building VR for real estate.
Yep.
And yeah, I could go into a big story there, but that's how I got into venture capital.
I love that. So think about it this way, man. I mean, if you wouldn't have taken the risk and taken the action of starting those 35 businesses, that wouldn't have, you likely wouldn't have gotten into venture capital, right? So like it was a stepping stone. Everybody has those stepping stones into what they're doing currently, right? So we've stepped from 35 chocolate bars, 35 businesses and chocolate bars, all the way up to VR walkthroughs for real estate. Now you've gone to being a wealth builder and investor, right? So take us from venture capital to commercial real estate investor to now co-hosting the longest running commercial real estate podcast, $250,000 of passive income, and educating 200,000 people a year, man. I got to know, what was that journey and how long did that go?
Okay, so I mentioned I'll provide a little bit more color. So I've been in real estate for a long time. I bought my first house when I was 24 years old, and I started with a strategy called house hacking or co-living, as most people know. Buy a single family home and rent it by the room. And I've been doing that for over a decade now. And so I've always kind of been in real estate. And I, saw VR technology become a thing and, realized that my best friend was traveling, showing 30, 40 homes to some buyers if it was their first time, and realized that there could be a product there, right? And VR didn't take off, but the photography side of our company did. We basically became like the Uber for real estate photography, and and realized that company wasn't going to be a billion dollar company. The largest photography company in the United States had like 15 million in revenue a year top line, and sold to them when we realized that it was not going to be a big thing. And so ended up figuring out, okay, what did I want to do next? And I wanted to learn how to become an investor. And so I joined Techstars and got to lead, basically be the person who deployed the $150 million follow-on fund that they had just raised.
Wow.
And so every day I was just looking at deals, and I probably reviewed over 3,000 deals at my time there, and got to invest in over 300 companies. And while I was there in 2021, my dad had passed away. And all of a sudden, my mom was left with several $1 million that my dad had left her. But my dad was the one who ran the finances in our family. And so all of a sudden, basically I needed to figure out how to provide my mom an income based off of, the money that he had left her. She was 65 years old and pretty much retired for 30 years already. And so what did I do? First thing I did was like what any responsible, I think, person would do, is go to a bunch of different financial advisors.
Sure.
And so I went to 3 different ones, and basically all of them, I basically learned that financial advisors are incentivized with assets under management to keep you in the stock market. And many basically poo-poo on any kind of private market stuff, including investing in real estate. And none of the options they provided me could provide me cash flow. It's like, okay, well, you can invest in dividend stocks, but you still have all the volatility of the market. So I did what I knew how to generate cash flow, which was invest in these single family homes. And I built up a portfolio. I have a portfolio right now of 11 homes, 94 units, and they in Atlanta, Georgia. And I basically realized, like, wow, I have all of my family, my mom's future pretty much in this one asset class, this one strategy, and one hurricane could come through and cause some real problems.
Sure.
And so I realized at that point that I had to diversify. And I know that, like, I like to think of myself as a pretty good operator in our niche. And It's a great business to be in, and but I couldn't go buy a multifamily apartment building or a self-storage facility or whatever, and run it as well as my own asset class that I've been doing over 10 years, that have learned all the nuances and right. And it would also divert my focus.
Yeah.
And so having worked at a venture capital fund, I like knew and realized that this was a thing, right? Like you can give other people money and they manage it professionally, just like what we did for other major institutions of investing in early stage companies. And so I tried finding a bunch of different people who knew how to do that. And in one of the mastermind groups I'm in called GoBundance, a lot of people there were living off of their income. And they were living off of these investments. And so, I'd ask them, like, what are you invested in? Where, and all of them would, they'd point to these different debt funds or working with these different operators. And each one of them had their own like style and fashion. And so I pulled the money out of my real estate portfolio and started diversifying across these other asset classes with other operators. And I think throughout that process, I've realized that had I known what I know now, I would be at least $1 million richer, like easy. And I realized that no one sits down and teaches you how to be an LP investor. And I've kind of realized as well that like most people also don't know how to vet a deal. And how do you get comfortable enough to like figure out about this random company online and do enough of a research process to feel comfortable giving the stranger on the internet like $50,000 to $100,000, large sums of money. And I honestly just felt there was an opening, right? I felt like for me to get better at managing the capital I have, it'd be helpful to study and learn about this space. The more people that I help, I realize that I get better and I get more sophisticated. I am constantly looking for deals and I'm putting myself online as like a professional LP investor, I guess you'd say. And so I get a lot more deal flow. And so the idea is that like, it's just a win-win, the more people that come to me and we help place capital, the better deals we get, the more volume we see. And so that's what I'm doing. I'm trying to build that machine to help people become better investors and actually know what they're investing into and why.
Most definitely, man. Well, I appreciate that. That's a definite big need out there in the marketplace. One thing that kind of stood out to me as you were speaking was, without saying it, pattern recognition, right? And you said, if I would known what I do now, I'd be $1 million richer, right? So what are some of those patterns that you can now recognize after reviewing probably close to, that was 3,000 deals on the business side. I don't know how many deals you've reviewed on the real estate side, but I bet it's pretty similar to that amount. What are some of those patterns that you can kind of recognize now that people can maybe put a framework for themselves as they're evaluating real estate investing opportunities?
So I think the first thing that a lot of people get wrong is they're reactive to deals in their inbox. They're not professional investors. They're retail investors, right? This isn't their full-time job. This is not what they do. And I know that from working at Techstars, how it was set up is that the investment team puts together a thesis. Here is what we're going to invest in. Here's our strategy. And then they go out and raise all the money. And so once they've raised that money, they can't just move away from that thesis. They need to stay laser focused. Most people, if they try to do that, they get frustrated because they don't have much deal flow, which is why I think a lot of people skip the thesis part. But from there, it comes to looking at a lot of deals. You can't be a great investor if you look at 5 deals a month.
Mm-hmm.
What I'm trying to do is look at tons of deals in the last 3 months alone. So my goal is I'm deploying, I'm redeploying and diversifying some capital I have this year. And in the last 3 months, I interviewed over 75 different debt funds and asked them all the same 30 questions. And now I have a grasp and understanding of the entire landscape. Is 10% high or is
Mm-hmm.
it average? How many of the firms have audited financials? What is the leverage that each fund uses? And so, basically tons of different questions. And now I can sort and filter and look at the entire landscape and figure out where does it make sense to put my capital instead of just looking at the reactive way of deals coming into your inbox.
That is great advice. And I realize I do this, in a different way, but it's all about at bats, right? Like, let's take we were talking about pheasant hunting before we got started, right? Like, if you probably went up there, I don't know if you are a hunter previous to that, but like, if you show up and you're like, all right, like, this is the gear I need to have, this is the gun I need to have, this is how I hold it, this is how I shoot it, this is where I aim. I mean, that first time is going to feel like foreign territory, right? But let's say you're doing that every single week. And then 3 years from now, you come back up to Kansas. Come on back up to Kansas. I'll take you out to the farm. We could shoot some guns. But like, you came back up, man, you be teaching me, right? Because you have you have the entire landscape taken advantage of, right? And you can understand that. It's the same thing with real estate investing, right? It's like, I'm in this thing for 9-10 years now. And it's like, yes, I have been looking at opportunities for that long. And I've done a lot of deals and I've had a lot of success and I've had some failures. And so now I have pattern recognition. But if you're being reactive to, hey, deal comes in, it's the limited groups that I'm involved with, here's their emails, and I'm supposed to react to those. It's like, how can I have that landscape? So that is impressive and valuable. And I think that many LP investors can take that advice and, and try to implement that in some regard if they're serious about it. If not, just call Pascal and play with him and let him do the thing, right? But like, that's why most people, when they get in and it's not successful, they're like, man, I'm not good at this. But that's not really true. They didn't even give themselves the right modality to be successful, right?
I imagine you do the same thing, right? Like, if you're constantly, deals are coming through in some form or fashion, and if you buy real estate of any kind, you have some sort of buy box about what you're interested in purchasing,
Right.
and that buy box can only work if you're seeing a bunch of deals. If you're looking at the MLS or if you're looking at Zillow all the time, that's the equivalent of the deal flow, right?
Mm-hmm.
So I imagine you're doing these in different areas of your life, but maybe not the one where it's most important.
Yeah, absolutely. Okay. All right. I love that framework. That's really, really good. So I do have a question for you. So when I saw this, right, like, passive income is a complete and utter lie. That stood out to me because, I always say there's nothing passive about actively owning real estate. And I make sure all my clients and investors know that. This quote was taken off a longer post that you made in March on Facebook about passive income, right? So like, what do you actually mean about this, right? Like, because people call me and say, man, I want that mailbox money, baby. Send me those distributions. I don't want to mess with it. But like, how do you truly get to that, right? As an investor, and if it's a complete and utter lie, break it down, break that post down for us.
Look, I think there's something you said about like to stand out online, you have to be polarizing. But I think the point here is true, right? Like I think passive income and active income is a continuum. Sure, could you put blindfolds on and invest in a fund, or just pick a stock, put some money in it, and it's quote unquote passive, and passive income? Sure. But I think when it comes to these types of investments or any investment, there should be some sort of research that's done, and you should have some sort of prediction, hypothesis, or thesis about what you think the next 5 or 10 years are going to hold, and then what investments are a good vehicle that aligns with that vision. And I think that's the work that needs to be done, right? And then, from there, it's figuring out, okay, how the thing that I'm investing in, when it comes to commercial real estate, I think that you should be investing with people who are doing the same strategy over and over, and you are investing in their track record of that strategy, rather than investing with someone new who's got like this big idea for a cool project. That's like the equivalent of like investing in a startup, totally different types of risk.
Yeah, absolutely. And I kind of glossed over this, but you had kind of 4 lessons: pattern recognition, the risk management is what we were just kind of talking about, the capital allocation. You did a great job describing how you have redeployed and are deploying capital this year, and then scaling insights. We talked about how many, you took just for debt funds, went and found 75 sponsors. That's at scale, right? And I hope that my buddies Aspen Funds were on the list and you got to connect with my man Ellis Hammond. I always see him on the running trail here in Kansas City. I don't know why he doesn't call me, because we run the same place at the same time. I might be on mile 15. He might be just on mile 3, though. That might be the issue. I don't know.
That's it.
Anyways, Ellis, if you are listening, which I know you're not, but I'm going to send it to you because of talking about you. I want to run with you, brother. I might not be able to keep up, but I'll try to run with you. I've run past him 3 times on trails now, or 2 or 3 times now. So, but long story short, Aspen Funds, great operator, great partner for myself and for many other people out there. Okay, so 3 pillars of smart investing. When I see the word discipline, I kind of get antsy. I kind of get giddy, right? Because discipline equals freedom is on my book shelf right here. And I love that. Let's say people are like, why does discipline equals freedom, right? Like, and my son, who's 5 years old, he did his first 3 pull-ups today. Yes, he's 5 years old and he's doing pull-ups because every morning he sees me out there working out, either in the gym downstairs or outside putting the work in, right? It's that discipline, because I want to have discipline around my physical fitness so that I can have freedom later in life to be able to coach football, play football, all the things with soccer with my daughters, whatever it is. Like, that's one area. That's an example of discipline equals freedom. So I'm excited for you to talk about discipline, diversification. Another book on my shelf right here is, 3 books here: Big Debt Crisis, Principles, and the Changing World Order, from my guy, Ray Dalio. Should be our president, but he's too smart to be our president. But anyways, I'll just say that if you ever run, Ray, I know you're a Democrat. That's fine. I'm still voting for you because you are awesome and you are moderate and you want to bring people together, in my opinion. But his book, in one of his books, I can't remember, one of his videos, he talks about the holy grail of investing, which is getting uncorrelated income streams and investing in those to create that diversification. So I want you to touch on that. And then DD, you've got 4 Ds here, man. You got the discipline, the diversification, and the due diligence. DD. I love the 3 pillars of smart investing. How'd you come up with this?
Oh, man. I think just basic tenets of investing, right? I think we're all reading from the same people: Ray Dalio, Warren Buffett. Look, I think everyone has their own version of what diversification means for them, what makes them feel comfortable. I'll start there. I think, one of the things that I learned was that, I'm not a complete equity investor. A lot of people have all of their money in the stock market. I'm also not completely a cash flow investor. I don't have everything in real estate. I'm kind of I like having a little bit of everything. Some equity, some personal real estate I own, some, real estate where I'm invested with other people. different asset classes, multifamily, self-storage. I'm in crypto. I'm a big fan, right? And I think that that's different for every person. I can tell you that something that I've learned myself when it comes to this is I realized that I had trouble sleeping at night when all of my money was tied up in the equity market. And I can also tell you that when at a point in time I had everything in real estate, I also couldn't sleep at night because I felt like I was missing out on a ton of growth. So I think this kind of thing is very personal. And so I kind of have this philosophy where it's like 80% of everything I earn goes into the cash flow bucket until I reached my $300K a year in income from those investments. And now that I've kind of reached that mark, now I'm shifting everything above that into the equities bucket because I have my safety net now. And so, look, everyone, it's personal. They think about it differently. I hope that kind of sheds light onto maybe other strategies or how other people might think of it. I think when it comes to due diligence and discipline, they kind of go hand in hand, right? I mean, I think first off, what is due diligence? Due diligence is due diligence is this really vague term. And everyone says like, oh, make sure you do your due diligence before investing. And something I talk about here is that due diligence is a continuum. There is the retail investor on one end where they might watch a webinar. If we're talking about being a limited partner in commercial real estate, you maybe watch a webinar. You maybe hop on a call with an investor relations person and ask a bunch of questions, and then you wire money. And then on the other side of the spectrum is a family office where they have an entire team of analysts, and they are following a company for 5 years, making sure they get all their updates. They're doing on-site visits and inspections. They're doing background checks, running, some even take the operator's books and get all of their statements and rebuild their books from scratch to make sure that no one's poking around and presenting false numbers. So I think the point is that everyone has a due diligence, has a different process.
Yeah.
And I think what's important is that you have a process, and that if you do it for a long enough time period, you will ultimately get better as an investor, because every time you get burned or you make a mistake or you lose money, all of those pieces, I at least sit down and think about like, okay, what was my mistake here? And I add that as part of my due diligence process. It's the question I forgot to ask, or like, did I do the background check? Oh no, that could have easily, avoided the situation. Cool. Now I'm going to do a background check every time I do a deal moving forward. I think, so I think if you are disciplined in doing a process, regardless of how intense it is, I think it's important to have a process, because only through doing that can you iterate and become better at investing, because investing is a skill just like anything else we do in life.
Very well said. I love it. And I love that we can utilize the 4 Ds: discipline, diversification, and due diligence. Hey, I do have a tip for you. If you ever have a hard time sleeping, which you haven't said you are right now, just have 3 kids, 6 and under, and come get a Monday, Tuesday, Wednesday, Thursday, Friday workout in with me, and we'll have no problem going to sleep by 8:30 or 9 o'clock, brother. I'll make sure of it. So next time you're up in Kansas City, let me know. We'll hit the trails together, man. All right. Thank you for walking us through that framework for smart investing. I really like that a lot. Okay. So I want to kind of just, we've got a lot more content here. One thing I wanted to kind of like think through right now, right? And you've talked a lot about, you like to have that diversification: stocks, crypto, collectibles. I don't know if you said you're in art or anything like that, but startups, real estate, stocks, all those different things. Okay, let's hone in on the real estate side of things, right? You mentioned previously, and I imagine this is kind of where you're thinking about deploying into, is debt funds, right? So like if you're out there as an LP investor, you see so many different deals coming from, I'm guessing, geographically spread out across the United States, maybe even internationally. You have asset classes that I'm sure are different, and then you have capital stack diversification inside of that. With where we are in the real estate cycle right now, where do you think that you will continue to evaluate for the next 12 to 15 months? Like, where is that next opportunity kind of in the commercial real estate space, or at least what you're seeing and you're trying to exploit and push into a little bit further?
Yeah. So first thing I want to take a step back, and there's something on screen that says like I want 100 different investments generating cash flow for me, not one. And I think I have changed my opinion on this one.
Ooh, strong
Because,
opinions weekly held. I like it.
yeah, I think what I've realized after investing in a bunch of these deals is that, frankly, it is very difficult to once you start building a buy box and you start seeing the landscape. I think it is difficult to find that many great deals.
Yeah.
And so, in the ideal world, I think I would have a lot of diversification, but I do. I think I've switched that. So there's kind of like a caveat there where, and also the amount of research it takes to do these well. I think
Absolutely.
it is difficult to spread out that many. But you mentioned, what am I trying to do to take advantage of today's market? Look, I think this is a tough one for me.
Yeah.
So right now, we are in a position where we have insane national debt. We still have a debt crisis. The bond yields are continuing to go up, and even with Powell potentially even lowering interest rates, I think, as we're seeing around the world, they might not be able to control bond yields like they have in the past, the Federal Reserve. So, Warren Buffett has all-time record cash. I think he's got over like 360 billion in cash. Over a third of their portfolio. You're seeing people chime in everywhere around the world. Ray Dalio with the Changing World Order, and it's been, and we're seeing a lot of distress in at least the commercial real estate market the last couple of years, and all the lights are flashing red. Now, what do you do in that scenario? I think, I've got maybe like a quarter of my net worth in crypto. I have a quarter, and then all the other stuff is in real estate. And I've tried to have a kind of a long-term thesis where, since I started real estate investing, I've always focused on the asset classes that I think crush in a recession, and focus on those. So, right now I do co-living. It's single family homes rented by the room. Another
that.
great asset class would be like mobile home parks.
Yeah.
Like people in times of crisis, or when we're thinking about inflation, people are going to have less and less disposable income. I think now all the influencers coming out now and saying like Airbnb is not doesn't work anymore and whatnot. But, I think what a risky asset class to be investing. It's all consumable, disposable income that we're seeing is getting inflated away. So I really think you need to have the long-term focus of, in 10 years, what will perform. Now,
Yeah.
I think with what's terrible about real estate is that it is highly interest rate sensitive. So I would argue that right now is actually, I'm thinking twice about buying more real estate. and I have a quarter of my net worth also in debt funds, and part of my thesis is that if the market does go sideways, I should have some capital that I could redeploy and take advantage of the opportunity. I've been around, like I remember being around in 2007 and 2008, and there, for 4 years, people were gobbling up real estate, and I didn't have the skills nor the money to do it at the time, and we are now in the longest real estate bull cycle that exists. I think it's close to 18 or 19 years now. And I don't know. I think it's an important time to be really thinking about what is the value of the dollar. Do you have other assets that are not in real estate, and or how are you positioning yourself so that you're diversified and not all in one strategy should things go sideways, because everything is flashing red that it's
absolutely. There's a lot of canaries in the coal mine, as Dr. Peter Linneman would say right now. You mentioned the consumer, and the consumer is the largest portion of America's GDP, right? And so you have to be watching the consumer. Additionally, jobs, in my opinion, is extremely important to be watching. Jobs drives everything. Many people talk about location. Very important. And I am probably more well-versed on David Ricardo's law of economic rent than most people, because I can actually tell you what that is and how to utilize that in a framework. So I think I have done my studying up on this, which would just showcase the fact that, look, right now, you got to follow jobs, and you got to understand where the consumer is facing. The other tailwind that I'm seeing, irregardless of all of the red flags that you had mentioned, is America first. And this is a huge component. I used to not have the connection from understanding, macroeconomics down to the micro. And it's really started to be apparent. And one of those things is because I've been operating in these different asset classes for 7 or 8 years now, right? So one example of these tailwinds is from 2010 to 2015, America onshored or nearshored only 11,000 jobs. You fast forward to 2024, Pascal, that's 350,000 jobs that have been nearshored or onshored. What are these people doing? Manufacturing, supply chain, infrastructure, construction. So if I can give you any kind of real estate investment tips or things to be thinking about, is follow where government is going to put their funding. And I guarantee you it's going to be in infrastructure, utilities. I don't know how to invest in utilities, but I bet Pascal does. I'm sure there's utility real estate or utility companies, whatever, but get you some in utilities, man. Like I think that's a great spot to be in. The way that we're playing, the way that we're playing this right now is simply, the industrial side being extremely hot in Kansas City, one of the, biggest logistic hubs in the Midwest. You can get to 80 or 85% of continental United States in a 2-day drive, but everybody's been developing these 1 million square foot centers. Well, all these jobs, they need 50,000 square feet and below. So the biggest asset class that we're pushing on, we're developing, we're leasing out, we're managing, we're doing pre-construction work on, is small bay industrial. Metal boxes with garage doors and doors, man. I mean, get back to basics. Those people are going to help build houses. They're still going to work on your HVAC. They're going to work on your heater, your roofs, your sidewalks, your parking lots, all of that stuff. Infrastructure, man. Anyway, so that's my 2 cents on, just investing right now. That's kind of where I'm putting all my effort into.
Yeah, I just wanted to echo that. I've been seeing that as well, and I've been looking a lot at what does the onshoring movement, the America First movement, mean, and what are the major cities that win? And you're exactly right. I mean, I've been talking to people who do industrial triple net real estate, and you've already seen increases in these in the interest for these buildings, the prices for these buildings. And I think it's only going to compound over the next 5 years. I mean, I think we're at the beginning of that trend.
Come on, man. You can come into Kansas City and build a metal building. I'll tell you how to build it, what to build it with. I'll lease it up for you, and it'll get 16 to 18 bucks triple net if you can deliver 1,500 square feet. 16 to 18. So anybody that's out there listening, I can get you land for $2 to $3 a foot, and you can lease it out at 16 to 18 bucks triple net. Reach out to me. That is a shameless plug. I do have 5 land opportunities in the industrial space, one that I'm doing a development on myself. I do want to give a shout out to some folks that have shown up today. Caleb Brown, he is a practitioner here in Kansas City. If you're looking for buy, renovate, rent out, refinance, this is your guy. He is posting daily on LinkedIn, helping out-of-state investors. Love Caleb Brown and everything that he's doing. Zane, always supporting us, man. Thanks for being here. Appreciate you. Definitely go give him a follow. That guy has absolutely blown up on LinkedIn, and I know why. But anyways, hey, Gabe Einhorn is also here today. Man, that guy's doing some cool stuff up in New York City, so I appreciate all of you guys joining us today. Okay, we're going to move off from common investor mistakes because I got to get to this slide right here. May have to have you on just to talk about some of these common investor mistakes. But we did kind of cover a number of those today in the show. All right, quick takes with Pascal. Are you ready for these?
Let's do it.
I'm a big reader, right? I've mentioned 5-6 books, today, right? And I just want to say that Joe Fairless's apartment syndication book, I mean, that book just does not get the love that it should, man. I did my first deal on the phone with an investor. It was an Airbnb property. We still own it today. Cash flowing, baby. New triple net lease on the bottom and 2 of the highest grossing Airbnbs in the city on top. Anyways, long story short, investor says, man, I just don't think I can manage this. This is 6-7 years ago. I'm like, hey, what if we structure it like this? And I'm reading out of Joe's book, joint venture, 80-20 deal. We'll both sign on the debt. We'll put in this money. I'll manage the asset. He goes, done deal. Closed on it 7 years later. Still own it. The thing has gone up in value at least $250,000 since we've owned it. So anyways, that is one of my favorite commercial real estate books. I don't think gets enough love out there. But Pascal, what's your favorite?
Man, I think there is maybe not my favorite commercial real estate book, but I'm always interested in learning about different asset classes, especially ones where my initial thought is like, oh, why would I want to invest in that? And try to change my mind. And that one I think is called Park Place, and it's all about mobile home park investing.
Yeah, and
it really kind of shaped my understanding of how supply is capped, how the model of mobile home parks is different, and how depreciation works is different because there's so much more infrastructure and you're renting out pads instead of buildings, or so I think pretty interesting real estate book, and I think worth reading if you're interested in that space.
Awesome. Appreciate that. Best piece of advice that you can give the listeners today?
So always find a mentor, find someone who's done what you are trying to achieve, and get them to give you the shortcut. That's like how everything in life works. And we are constantly trying to pay off ignorance debt.
Yes.
So find a mentor.
Yeah. I'm bringing on a new mentee right now, and people reach out to me on a regular basis. Hey, can I spend some time with you? Can I learn from you? Yeah. Go get your commercial real estate license. I got deals to work on. Come on in. I'll teach you how to lease, sell, do it, underwrite, all of it. But you got to take some action. So to find that mentor, you got to be willing to put in the work. Pascal's already said, man, he's underwritten 3,000 business deals and deployed into 300, right? What is that, 1%? I'm not great at math, but that's not that much to get. But you deployed $150 million into those businesses, right? You were willing to put in that work. So I'm sure along that journey, a mentor saw, this guy's willing to do the work. So, we're going to do that. You also don't become a co-host of the top commercial real estate podcast without being able to be willing to put in the work, right? So Mr. Joe Fairless probably said, oh man, I got to grab that guy because he is doing some really cool things and can bring a lot of value. So make sure if you're looking for a mentor out there, try to add some value before you try to just become a mentee. All right. How about a trend in commercial real estate that not enough people are watching, or they should be looking more into? We have to exclude flex industrial small bay, and we have to exclude mobile home parks. Give us something fresh.
Man, trend. Look, I think what I think is interesting is there's a trend right now where every new person that got into being an investor in commercial real estate over the last 5 years did not do enough research and did not and did not take enough responsibility, I think, for their actions, right? I think you're seeing a lot of, oh man, I got wrecked by this operator, or, they should have never done this deal or whatnot. And I think, I think just because you're in commercial real estate and the last 10 years have been great doesn't mean they are moving forward. And there are many, many operators who stood on the sidelines for 2 or 3 years and didn't do deals. And I don't know if it's a crowd pleaser, but I do think it does spark some, like, did you really do enough due diligence? Did you really understand the deal? Most people don't, especially if they're new and it's their first couple deals. And frankly, they don't know how to do due diligence, and I blame them, right? We've all been there. But I think if you're serious about, you're going to, regardless of whatever asset class you're in, whether you're investing in the stock market or if you're investing in real estate, there are investments that win and there are investments that lose. And so I think it's, I've just seen a lot of like blaming the other party. And I do think there is a healthy amount of that. But also you can only control what you own. So I think there needs to be a little bit more ownership, myself included. I've done a deal that I should not have. And I think that's a trend.
Yeah, absolutely. Well, what's next for you and how can people connect with you, man?
Yeah. So look, I'm an LP investor myself. I'm probably like many of your listeners. And so I'm constantly looking for deals, having my own deal flow. And I share that with anyone who is on my email list. So if you want to see different 506C deals that are for accredited investors, anything from like self-storage to mobile home parks to apartments, and you want to learn how to do real diligence and see a lot of these deals, I think we've got over 700 in our database now. You can sign up at passiveinvestingstarterkit.com. And you can also find me on LinkedIn. Would love to connect.
Absolutely. Passiveinvestingstarterkit.com. Got the links up here. They'll be everywhere so people can reach out to you, Pascal. Man, thank you so much for being here. I really do appreciate all of the insights that you dropped today and having a little bit of fun with me on this Wednesday afternoon. It's been a blessing, and thank you. I appreciate it.
Thanks for having me on, man. This was a blast. You're also a great host. That makes this fun.
Yeah, absolutely. But if you're ready to get started in commercial real estate, I've had a few LinkedIn posts sort of go viral over the last 2 weeks, and many people reaching out to me wanting to learn about Kansas City commercial real estate. Here's how you do it. All right. Just go to mwcreadvisors.com or just slide into my DMs on LinkedIn. I will respond to you. It is me posting, commenting, connecting. I do not outsource that. I am very protective of my LinkedIn. It is something I have been very disciplined around for the last 7 to 10 years. And I think that I will continue to be that way. But you can check us out on our website here. You can find me on LinkedIn, Mr. Kansas City, self-proclaimed Mr. Kansas City. Logan Freeman. We'll be back here next week doing a deal spotlight of our 75-bed certificate of need, last known viable option for you if you are a skilled nursing facility operator or an investor. Blank slate, come in. You can really make this your own. Great location right in the Northland of Kansas City. Average household income, $92,000 plus in the surrounding area, right around 5 different hospitals, a very highly trafficked road, and a high school right across the street. So very cool opportunity. We'll be here next week spotlighting that deal with our newest member of our team, Mitch Case. He'll be dropping by for the first time on the Market Pulse. So very excited for that. So check us out next Wednesday. We'll be back here. Pascal, thanks again. And thank you all, Caleb and everyone, for joining us today. We had a blast. Thanks for being here. We'll see you next time.